Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you get some good trades. In my live active trade room, I've had some folks recently ask me if I would talk a little bit more about the average daily range. The average daily range, since I've been using it a few years ago, has really been something that's made a difference in my trading. And why is that? It's interesting how the market has a tendency to honor the average daily range. Now, I typically use a 5-day average daily range since I'm an active trader. I trade pretty much intraday. But what I found is that more times than not, when the market reaches an average daily range level, one of the key things I look for is for the market to bounce off of that average daily range. As other traders are looking for the market to continue making a move that way, I'm getting to be a bit of the contrarian, thinking it's hit that average daily range, we should be looking for a turn in the marketplace. So today what I want to do is share a little bit more about what is the average daily range and some specific things to look for when you use the average daily range. Now at Compass FX, we've developed a tool called the Average Daily Range Pro Calculator. This calculator does a lot of the work for you. It does all the averages, it sets up the daily targets, weekly levels, and it helps you define where the market's going to go. Now you can track the average daily range. It's pretty simple to compute. You simply take the daily high minus the daily low, that gives you a range, and then you do it over a period of days. Again, I like a 5-day average daily range since I trade in active mode. Now why do we look for this as well? One of the things I've noted is that price has a tendency to go back to where it's been before, and price has a tendency to cycle under normal trading conditions between a certain resistance high and a support low. So what we look for is the market to literally cycle up and down between these institutional highs and institutional lows, often referred to as the average daily range. Now, sometimes we'll have an economic event, a driver in the marketplace where the market will literally break the average daily range and make a move beyond. It's interesting to me that oftentimes when the market makes that move, it moves to a previously seen average daily range. And so we look for the market from time to time to move from range to range. If it makes a move, and let's say we had an average daily range over 5 days of 100 pips, and there's this economic event like a non-farm payroll or a consumer price index or a gross domestic product report, and it comes out, and the market makes a move on that. When the market settles into a new range, it's interesting how oftentimes the market will again cycle about the same number of pips as it did previously seen in the earlier average daily range. Let's go to the charts and let me show you what I'm talking about here. When you look at the euro dollar on a 30-minute chart, you can see that last Friday we had this low down here, and the high up here was about 96, 97 pips. Today we've seen the market go to a high down to a low point right about 105 pips. In both cases, you can see how the market had moved back towards center, about a 23.6 to a 38.2. Well, if you take a look up top, I've got my average daily range pro calculator running, and you can see that the 5-day average daily range is 102 pips. So oftentimes as I trade, like I did today in my active trade room, when I stepped in this morning and the market was sitting down in this area, the market had moved about 80 pips or so. And the market started making a move back up. When it faltered here and started falling back over, I had mentioned to folks to look for the market to move down just to right about this level here, the weekly low target of 131.06, maybe a little bit below that. Why? Because if you take a look, the average daily range of 102 pips over the last 5 days sits right at about that 31.06 level. I thought there might be a chance the market might touch 3100, but it didn't. But it did fulfill the average daily range. So what's the expectation? The expectation is to make a bounce back up, hit a level, maybe bounce back down. Now, that's great if the market makes that move. But what if the market doesn't make the move of the average daily range? Let's go take a look at the pound dollar. You can see that over the last 5 days, the pound dollar's had a 5-day average daily range of 104 pips. As a matter of fact, we look at last Friday from the low here up to the high, you can see the market is right there, right about 105 pips. Pretty much right at the 5-day average daily range. But today, from the high to the low, we can see the market's only moved about 57 pips and is bouncing back up. Now, a couple things I want you to make note of on the pound dollar going into the European session tomorrow is look for the pound dollar to potentially come up to right about 61.64, 61.65. This is the high going back to October 31st. And the market is expecting for the pound to potentially go up to that level and bounce off of that. Now, if you take a look here from this low point to the high, it's not quite the 104 pip average daily range, but we're getting close, within about 10 pips or so. There's a possibility there. If the market doesn't reach up to that level, I'm looking for the market to come up to Friday's high, the weekly high of last week, which is right around 61.41. So somewhere right in this area, I'm looking for the market to come up, hit, bounce, and move back down. And from that point, I'm looking for the market to potentially make the complete move of the average daily range. What I've found is if the market cycles up and down within 50% of the average daily range, and it does it for a day or two, look for a break. If it goes for 2 days, look for even a stronger break. And usually the break happens around an economic event. Now, if you want more information about the average daily range, I do recommend you go to www.compassfx.com/ADR. You'll find information about the average daily range pro calculator, and you'll also see a video there. A lot of folks like the average daily range pro calculator because not only does the average daily range pro calculator give you the average over a period of days, and you can select the number of days you want, be it from 2 days to however many days you want, but it also gives you ADR high targets and low targets that are proprietary to the calculator. And oftentimes I find that the market hits either the ADR low target or the ADR high target on a regular basis. Also, the average daily range pro calculator gives you the weekly levels that we look for the market to hit. And again, as I said earlier, the market has a tendency to honor the average daily range levels because we're looking at price only. And price has a tendency to cycle. It has a tendency to go back to where it's been before. And you can notice that this level right here, the low of the week, 31.06, the market hit, honored it, and bounced off of it. So my expectations is that the market may come back up to 31.58. It may even push a little bit higher, coming back towards where we started here. And if the euro starts making a strong move back up, we may see it go back up towards 32.60 area before making a bounce and a push back down. Well, folks, this is Dean Malone with Compass FX. Again, look to use the average daily range. Look for the market to make its move from high to low based on an average daily range. When it reaches that average daily range level, look for the market to bounce. If the market tightens down to 50% or less over a day or two, look for the market to make a break and then a run of the average daily range level, be it 100 pips or whatever it might be over a period of time, or making about 25% beyond that average daily range. Well, folks, this is Dean Malone with Compass FX. Hope some of this information will help you out. Y'all make some good trades. We'll talk to you next time. Bye-bye.